Bursa Malaysia is expecting average daily value of stock trading to improve slightly to between 2.3 billion and 2.4 billion this year, up from 2.07 billion in 2022, supported by gradual improvements in trading activities. CEO Datuk Muhamad Umar Swift said that with recent improvements in the ringgit and listed companies' valuations, the stock exchange operator is expecting more foreign and domestic investments going forward. Bursa Malaysia's net profit contracted 36% year-on-year to 226.57 million from 355.25 million, weighed down by lower securities trading revenue as ADV normalized to 2.07 billion in 2022 from 3.55 billion in 2021. The company is targeting a PBT of between 295 million and 326 million this year. Bursa Malaysia reported a PBT of 310 million in 2022, which is 35% lower than the 478.44 million in 2021, while revenue contracted 21% to 603.25 million, weighed down by lower trading activities by the retail and domestic institutional investors. Umar said that Bursa Malaysia will continue to expand its product offerings, particularly by bringing in more initial public offerings. It is aiming for 39 IPOs with a combined market capitalization of 10 billion this year, compared with 35 IPOs in 2022 that had a combined market capitalization of 11.5 billion. Chairman Tan Sri Abdul Wahid Omar said there is rising interest from SMEs seeking listing this year, and that explains the lower estimated combined market capitalization. He clarifies that the idea is to allow these smaller companies to come to market to raise capital that will allow them to grow. Umar says that apart from bringing in new listings, Bursa Malaysia will continue to enhance the public's accessibility to market information in order to sustain retail investors' trading interests. He also warned against any attempt for market manipulation activities as the operator strives to build an orderly and vibrant capital market to ensure a healthy level of speculation. Lotte Chemical Titan Holding reported a net loss of 317.2 million for its fourth quarter versus the net profit of 168.89 million it posted in the fourth quarter of FY 2021. This makes it LCT's third consecutive quarter of losses. According to the group, the weaker earnings were due to the decline in margin spread amid weakened market demand resulting from the volatile external environment, higher foreign exchange losses, and a share of loss from Lotte Chemical USA Corp. Revenue for the period declined 23% to 2.07 billion from 2.68 billion previously as average selling prices and volumes dropped. For FY22 as a whole, LCT recorded a net loss of 714.6 million compared with a net profit of 1.04 billion a year before, while revenue ticked up by 1.9% year-on-year to 10 billion ringgit from 9.83 billion ringgit. President and CEO Park Hyun-chul admits that the near-term outlook remains challenging, but says that LCT has implemented an optimization plan by balancing production costs and economic efficiencies. He adds that LCT has also conducted rigorous cost management and financial liquidity to ensure that its financial positions remain healthy. As at December 31st, 2022, LCT has cash and bank balances of 1.32 billion ringgit. In addition, Park says the completion of the construction of the Lotte Chemical Indonesia ethylene project in 2025 will strengthen LCT's market presence in the petrochemical industry with a 65% increase in total production capacity, which will help to cater for the anticipated increase in demand for its products in the country. Pestech International confirmed that two of its executives have been charged for allegedly abetting the misappropriation of 10.6 million related to its wholly owned unit, Pestech Technology. Pestech said both Executive Chairman Lim Ah Hock and Managing Director and Group CEO Lim Pei Chuan were charged at Shah Alam Sessions Court last Friday. The charges were framed under Section 109, read together with Section 403 of the Penal Code, which states that those found guilty of misappropriation could be jailed for up to 5 years, whipped, and/or fined. The public prosecutor has issued one charge to Ahok and 3 charges to Pei Chuan for the offences, Pestech said today in a stock exchange filing. The duo strenuously denied all allegations and claimed trial in respect of all the charges against them. Pestech explained that the directors have provided comprehensive explanations to the board, then that after due consideration, the board decided and concurred unanimously that it is not necessary to take any action against the two executives until the court decides otherwise. Pestech said the duo CEO and Pestech Technology CEO were investigated on 4 payments amounting to 10.6 million paid to a consulting company. Pestech Technology was alleged to have made payments for works not rendered by the consulting company. Both Ahok and Pei Chuan were alleged to have abetted these payments. Perusahaan Automobil Kedua is prepared to absorb the sales and services tax for customers who will not receive their orders by March 31st. President and CEO Datuk Sri Zainal Abidin Ahmad says that to date, there are about 15,000 to 20,000 outstanding units for vehicles booked before June 30th, 2022 that are entitled to SST exemptions. During Perudua's 2023 Outlook Media Conference, Zainal said that there will definitely be spillover as Perudua has realised its difficulty to deliver the outstanding units in time. He explained that Perudua is expected to shoulder a cost of 45 million in SST payments based on an estimated 15,000 units of vehicles yet to be delivered. According to Zainal, the Beza variant has the highest number of units on the waiting list. However, on a positive note, Perudua's cancellation rate is only 2% in 2022. In terms of overall outstanding bookings brought forward from 2022, Zainal said there are 220,000 units which Perudua will fulfill in 2023. Meanwhile, Zainal said that Perudua will not increase the price of its existing models in 2023 despite the rise in material prices. He said that the car maker is resolving internal cost deductions to manage inflation. Zainal believes the rise in material prices have peaked and will stabilize in mid-2023 due to economic recovery. In conjunction with the Media Outlook Conference, Perudua announced that the latest Perudua Axia model under the Perudua Smart Build has been made available for bookings nationwide. According to Zainal, the tentative price range is between 38,600 ringgit and 49,500 ringgit. A man has filed a lawsuit against former Premiers Tun Dr. Mahathir Mohamad and Tan Sri Muhyiddin Yassin for alleged abuse of public office and negligence over the cancellation of the Kuala Lumpur-Singapore high-speed rail project. Muhammad Hatta Sanuri, who filed the suit through Messieurs Mohaji Hazuri and Ismail on December 30th last year, also named former Minister in the Prime Minister's Department for Economy, Datuk Sri Mustafa Mohamad, former Transport Minister Datuk Sri Dr. Wee Ka Siong, and the government as 3 other defendants. In the statement of claim, Muhammad Hatta said Mahathir, who was then the 7th PM, had committed tort misfeasance in public office when he decided to postpone the HSR project, causing the government and the Malaysian people to pay compensation of almost 46 million to the Singapore government. He claimed that Muhyiddin, who was then 8th PM, also committed tort misfeasance in public office for terminating the project, causing the government and the people to pay over 320.3 million as compensation for the cancellation of the bilateral agreement between Malaysia and Singapore. Muhammad Hatta also claimed that Mustafa, who was responsible for managing the project, had committed a similar offence by shelving the project, while we committed tort misfeasance in public office for denying Malaysians their right to enjoy a first-class transport system with the cancellation of the HSR project. Muhammad Hatta is seeking a court order to declare the cancellation of the project null and void, as well as for all the defendants to pay 1 million ringgit in compensation to him and all Malaysians for wrongfully and negligently cancelling the HSR project. Case management for the suit has been set for February 2nd. To recap, on January 1st, 2021, Malaysia and Singapore announced the termination of the 350-kilometre HSR project as the two countries failed to reach an agreement on the changes proposed by Malaysia before the expiry of the project agreement on December 31st, 2020.